This is the performance summary for the relative strength strategy for week ending July 10th. Let's start by inputting the current account balance into the spreadsheet. So for the month of July so far, we are down 2.1%. And these are the three holdings in the three asset portfolio. First one is FDCPX, which is the Fidelity Select Tech Hardware portfolio. And the top five holdings in that one are Western Digital, Cisco Systems, Samsung Electronics, Apple, and Arista Networks. And this is the long-term chart of that mutual fund. This one is going back to 1998, and that's how it's performed since that time. The next holding is the Fidelity Select Gold portfolio, which is FSAGX. And the top holdings in that mutual fund are Newmont Corp, Agnico Eagle Mines, Wheaton Precious Metals, Barrick Mining, and Franco-Nevada Corp. And from 1992, that's how that mutual fund has performed. The next holding is SLV, which is the silver ETF. And that's how silver ETF has performed since 2006. And these next two are the extra holdings that are there in the 5-asset portfolio. And the difference between the 3-asset and the 5-asset is that the 5-asset is more diversified. It has slightly lower performance, but also slightly lower risk because of the diversification. So the first one there is FFGCX, which is the Fidelity Global Commodity Stock Fund. And the top holdings in that mutual fund are ExxonMobil, Corteva, Archer Daniels Midland, Bunge Global, and Nutrien Limited. And the chart looks like this for that mutual fund going back to 2009. And the second holding in the 5-asset portfolio is FPHAX, which is the Fidelity Select Pharmaceuticals portfolio. And the top holdings in that one are Eli Lilly, GSK, Viatris, UCB, and Merck. And the chart of that one looks like this, going back to 2001. Okay, and let's input the current balance into our cumulative tab. And this is what the actual account growth looks like since I went live back in 2025. The actual brokerage account is up 68.4%. And that's represented here by the yellow line. And the gray line is the S&P 500. And let's also look at the long-term back-tested performance. This is the backtest for the 3-asset portfolio going from 1991 to present date. And over that time frame, the annualized performance, the annualized return is 18.2% compared to only 9% for the S&P 500. And year to date, the 3-asset portfolio is up 24%. Whereas the S&P 500 is up about 10%. And this is how the equity curve looks for the 3-asset portfolio backtested to 1991 compared to the gray line, which is the S&P 500. And let's also look at the 5-asset portfolio. That one over the same time period has an annualized return of 17.2% compared to 9% for the S&P. And year to date, the 5-asset portfolio is up 21.5% compared to about 10% for the S&P. And that's how the equity curve looks like for the 5-asset portfolio. So if you're interested in learning more about relative strength, or you'd like to sign up for my Signal service, where I email you the mutual fund and ETF picks into your email inbox on a monthly basis, please visit my website at returnstream.com. Link is below. Thank you.